Oh my goodness, guys, a little company named Amazingzon just reported the most unreal earnings so far in this entire earnings season, and in a good way, okay? If Tesla has the worst earnings reported so far, Amazon definitely has the best, guys. These numbers shocked me when I saw them. Unreal, okay? Now, first off, in terms of Amazon stock price today, it's not making that much of a big upward move, only about a 1.5% upward move there, but $30 a share, but that's because the share price is so insanely high on Amazon at this particular time. But yeah, 1.5% move, not that big of a move considering how shocking these earnings were. But at the flip side, Amazon stock has been on an absolute tear over the last few months. This is a 3-month chart. It was around $1,600 about 3 months ago. Now it's above $1,900. So needless to say, the share price has, risen $300+ in about 3 months, okay? So at first, when you look at some of these numbers, they weren't super impressive. I mean, the revenues came in at $59.7 billion versus $59.7 billion was expected by analysts. Okay, they met expectations there. Year ago, there was basically about a 17% rise year on year on revenue. That's good numbers, okay? Amazon Web Services revenue came in at $7.7 billion. That's an absolute growth beast. But that was versus about 7.7 was expected by analysts. So as of right now, it's like, okay, what's so shocking about these earnings? Well, when you go ahead and look at the earnings per share, that is shocking, okay? Look at the EPS, guys. EPS came in at $7.09 versus $4.72 was expected. When I saw those numbers, I was like, are you kidding me? Are you flipping my flapjacks, guys? That is ridiculous, okay? Keep in mind, a year ago, they had $3 and some change in earnings per share. They over 2x'd their earnings per share year over year. Unreal, okay? Let's look at these numbers a little deeper, okay? Here's some more amazing numbers. Operating cash flow increased 89% to $34.4 billion for the trailing 12 months, compared with $18.2 billion for the trailing 12 months ended March 31st, 2018. 89% operating cash flow increase, guys. Unreal, okay? Free cash flow increased to $23 billion for the trailing 12 months, compared to $7.3 billion for the trailing 12 months ended March 31, 2018. That's basically a triple up there in free cash flow, guys. These numbers are incredible, okay? The free cash flow numbers are shocking. The earnings per share and net income numbers are literally shocking that Amazon's putting up right now. This is just ridiculous, okay? The worst thing I could find in the Amazon report, the worst thing is their net sales, basically their revenue overall. It increased 17% to $59.7 billion in the first quarter compared to $51 billion in the first quarter of 2018. Excluding the $1.1 billion unfavorable impact from year-over-year changes in Forex, okay? Basically, net sales would have increased 19% compared with the first quarter of 2018. That's the worst thing I could find in the Amazon report, the fact that they only grew revenue 17% in this quarter, but that is a still amazing number because you got to think about like how big of a company Amazon is at this particular time. Like Amazon's a massive company. We're talking about a company doing $50 billion+ a quarter in revenue, so it gets really, really hard. It's like the law of large numbers, okay? When these numbers are getting so big, it's hard to continue to increase them at these unbelievable rates. But still, 17%, 19% if you basically take out the Forex, changes there, guys. That's still very impressive, but that's the worst numbers I could find, okay? Operating income increased to $4.4 billion in the first quarter compared with operating income of $1.9 billion in the first quarter of 2018. Net income increased to $3.6 billion in the first quarter, or $7.09 per diluted share, compared with net income of $1.6 billion or $3.27 per diluted share in the first quarter of 2018. Once again, that's over a 2x year over year, okay? There are very few companies on the level that Amazon is, the massive companies like Amazon's literally, them, Apple and Microsoft are always battling out for who's the biggest company in terms of market cap. When you have a 2x plus in EPS year over year, it's just ridiculous, guys. It's just ridiculous, all right? Now, as I spoke about, Amazon Web Services continues to be a growth beast, okay? Amazon Web Services, which they call AWS, by the way, announced several new customer commitments and major migrations during the quarter. GoGo Inc. and Lyft are going all in on Amazon Web Services. Second Spectrum and the LA Clippers named Amazon Web Services their official cloud and machine learning provider. Standard Bank and Verifone selected Amazon Web Services as their preferred cloud provider. The Guinness Six Nations Championships named Amazon Web Services as their official technology partner. Volkswagen is joining forces with Amazon Web Services to transform automotive manufacturing manufacturing, powering the Volkswagen industrial cloud, and integrating more than 30,000 facilities and 1,500 suppliers and partners in Volkswagen's global supply chain over time, as well as Ford is joining in the fun with Amazon Web Services. Amazon Web Services continue to expand its infrastructure to better serve customers, launching Amazon Web Services Asia Pacific Hong Kong region and announcing plans for the Amazon Web Services Asia Pacific Jakarta region. Amazon Web Services now provides 64 availability zones across 21 infrastructure regions globally, with announced plans for another 12 availability zones in 4 regions in Bahrain, Indonesia, Italy, and South Africa, okay? Amazon Web Services just continues to just swallow up big company after big company into basically using the Amazon Web Services different products, and needless to say, that is great for Amazon Web Services. Like, I can't really think of many big companies out there that are not using Amazon Web Services at this point in time, at least in some way, guys. So needless to say, that's just a Goliath company that a lot of us just did not see coming. Everybody understood, you know, the Amazon retail side of their business, but this Amazon Web Services is just a massive beast, guys. $7.7 billion in revenue in the last quarter. And keep in mind, that's just, that business is still in the early days. Like, that's not going to be done growing anytime soon, okay? And it's going to be a very sticky business overall, okay? In terms of their guidance, so they guided for net sales to be between $59.5 billion and $63.5 billion, or grow between 13% and 20% compared with the second quarter 2018. So needless to say, it's a pretty wide range there. Operating income is expected to be between $2.6 billion and $3.6 billion compared with $3 billion in the second quarter 2018. I will say that's a lowball number. Come on, Amazon. Like, you guys know you're going to kill that number. Like, Amazon really sandbagged that number, in my personal opinion. Who knows? Maybe they legitimately think they're only going to do those numbers. I think that's some low ball numbers there, okay? Look at some of these numbers here, okay? If we look at the 3 months ended March 31st, year over year, 50% rise in cash and cash equivalents, and net income, guys, over a 2x, okay? Over 2x year over year. But then you look at the 12 months ended March 31st, 2018 versus 2019, and that's just insane, guys. That's basically a 3x plus there year over year. Just insane numbers, guys. These numbers are hard to wrap your head around how fast they're starting to grow the net income and the operating cash flow and things like that, okay? Now, something I thought was interesting is North America segments are still growing very nicely for Amazon, up about 17% year over year there. But in terms of international, they have, you know, some weakness, I would say, in the international markets overall. Net sales only increased about 9% in the international segment, which is weird because for most big companies, they actually see their revenues in terms of their revenue growth generally is much bigger in international markets than North America. So it's interesting that Amazon actually is having some troubles growing, you know, at a faster clip, basically the international market than the North American market. That's a little different, okay? Now, if we look at Amazon stock overall, okay, it's a stock that has an insane trailing P on it of 94, okay? But a forward P on it of roughly around 48. And you guys know, like, for me personally, like a 48 is kind of rich, okay? Actually really rich for my blood, okay? Anything really above about a 30 is usually, you know, really high for me to be investing in a company. I look at Amazon at a 48 roughly forward PE. Can I really say that's not actually a smart investment? Because Amazon obviously is going to continue to grow their retail side of the business for years to come, okay? There's no question about that. I don't think really anybody's questioning their ability to continue to grow that retail business in terms of revenue and profits in future years. Then you look at Amazon Web Services. That's not going to slow down anytime soon. And I've seen some Amazon executives, I believe even Mr. Jeff Bezos once mentioned that Amazon Web Services over the long term will become much larger business than their retail business. And that is just mind-blowing to think about, guys. So if I look at Amazon here, can I really say it's a bad stock to buy at a 48 forward P? Actually, no, I can't, which is really weird because usually a 48 forward P, I'm not even considering that stock. That's ridiculous. But in Amazon's case, I gotta say, with how impressive their numbers are, how impressive their net income, their EPS numbers are, and their overall cash flow, it's hard not to say this stock isn't easy money in the stock market if you're looking at it from a 5 to 10 year perspective. Like I can't really see any, like if you buy Amazon, like if I bought some Amazon stock today, there's almost literally no way possible I can't see myself, you know, making at least 50 to 100% on my money over the next 5 to 10 years. years. There's just no way, if not more than that, overall, because of how fast they're able to grow. And even if those growth rates slow down, they're still going to be posting some amazing numbers, okay? Even if they slow down. So what? They only increase net income 50% next year instead of a double up, basically? Like what's it matter in the end when you're growing at these type of clips? And then what do you slow down to, a 30% clip, a 20% clip? Still, like, how much growth the company has going forward in the future in earnings per share and net income, it's literally mind-blowing. And then the cash flows and their ability to expand into other businesses and buy other businesses and integrate them in Amazon. There's just no way I can see you buying Amazon stock and not making money over the next 5 to 10 years. Just literally no way possible. So incredible numbers at Amazon. They get, so far for this earnings season, they get the best numbers reported. I haven't seen anybody report, that's a big company like that, report that insane of a beat on EPS. Like, just ridiculous, guys. So anyways, I hope you enjoyed this. And it's funny, just one last thing I want to mention. It's funny how quickly things can change with a stock like Amazon. Amazon just, 5 years ago or so was that stock that, was spending tons of money, and people were like, they're never going to make real profits, and they're spending all their money and they're burning all their money. It's funny how fast things can change. 5 years or so later, all of a sudden Amazon is, the biggest company in the world. It's funny, guys. It's funny. Anyways, thank you for watching and have a great day.